Welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss cryptocurrency and divorce with Carolina Martinez, a certified fraud examiner, certified cryptocurrency investigator, and a cryptocurrency accountant in Miami, Florida. So if they're in the process and trying to prove the other spouse is actually hiding it, what I'm hearing you say a lot is that a lot of times they're printing it on a piece of paper. Maybe that piece of paper is going into a safe or a security box or a lock box. So I'm thinking, even if you could identify that there was a receipt for a security box, or, in your house, if there was a safe, there might be documents in that capacity. Do you also see, you just talked about the case where they had to give all the wallet information. Doesn't that also create a little bit of a complication that you have to provide this information, and now, is it less secure in some capacity? You know what I'm saying?
No, because the information that they had to provide is just the address. The
Oh,
address is found in the blockchain and it's public information. They do not have to provide their private key unless when the government, the cases that I have seen that the government has requested people to provide their private key is when it is a fraud case. But let's say the divorce, in this case, the divorce case, uh, Josh says to the person that has the asset, said, okay, we're going to split it 50-50, then that person willingly will have to send that 50% to the other person wallet.
gotcha.
And but he does not have, or he should do not have to provide the private key.
Hmm.
If it gets more complicated, that divorce cases can get complicated, then they will have to hire a third party to act like a mediator, and then that third party will have to get either the coin sent to a wallet or the private key to make sure that they get splitted.
Right, because they would have to verify the amount and
Yes.
and things like
The
that.
amount the amount you cannot verify it by looking at the blockchain. You can verify the amount.
Oh, you can.
Um, yes, you go
Okay.
because you see less the blockchain ledger is like if it's like a bank statement, to put it that
Mhm.
way, for all the transactions that happen in the blockchain. But it's a public information ledger. So if you go in there, you will see a bunch of transactions. It will not tell you who it is, but if you already have the wallet address and that person said, yes, this is mine, then you are able to tell, or the judge in this case will be able to say, okay, you have this much because we see in the blockchain that you have $250,000. We need you to split it with half and half, just to give you an example.
Yeah, that's a good example because how it would be split, in if you had a normal investment account, we would do this quadro, which is like you tell the bank to split the account. But in this situation with cryptocurrency, it would be like the blockchain will say you have the 250,000, and then the person that owns those accounts would transfer the 125 or half of it to another person's basically cryptocurrency wallet that they would
Mm-hmm.
have to create, right?
Correct.
Okay.
Correct.